if you see this big massive move to the upside, these green consecutive candlesticks, if you see them in a row, take a buy when the market comes back to this level. Hello guys, my name is Kenny FX, and if you are new to this channel, you can just consider hitting the like button, and don't forget to subscribe so that you don't miss when I drop my new video. Yes, so without much ado, let's just hit straight to the video. Yes, so here guys, we see that there's a break of structure, but before that, normally we start our analysis from the higher time frame, right? So we come to the 4-hour candlestick, 4-hour time frame, sorry. Yeah, but like in the 4-hour, every single candlestick like this one stands for 4 hours, right? This single candlestick here takes 4 hours to close, to fully close, you understand? Yes, so in the 4 hours, as you can see, this is just very clear that it's an uptrend, right? We have this push, pull back, push, pull back, push, and then pull back. It was now coming to break this low, but it did not. So we now have the final push to the upside. So that tells us very clear that it's an uptrend, right? Yes, so from there, what do we do when the market is on an uptrend? We only look for buys, we don't look for sells. You get? In an uptrend, never look for sales. If you do that mistake, you're just exposing your money to the market. Okay, yes, so here we have a break of structure, of which we point out as a BOS. We have a break of structure, then right here we have the order block that caused the break of structure. Guys, if your order block is the last candlestick move before the upward move, right? So it is this green candlestick here. Yes, so right here we are done with the 4 hours. We can see there's a break of structure, then the order block that caused the break of structure. Good. Yes, so from the 4 hours we scale down to the lower time frame, of which we have 1 hour. Let's tap on 1 hour, and when we're scaling down, it is all for refinement, right? We refine and make corrections of our tools that were pointed out. So here we see another break of structure to the upside, and then we have the order block that caused that break of structure, which is going to be this one. And then what else do we have? Yeah, I think that's all we see from the 1 hour time frame. And we didn't adjust this one. I told you when we come to the lower time frame, we keep adjusting, right? Yes, so I think our work here is done, so we shall scale to the lower time frame. Let me just do this order block. This is order block, this is also an order block. Then we move to the 30 minutes time frame. Now this way of scaling down from higher time frame to the lower time frame is the one we normally call top-down analysis, right? It's what we call the top-down analysis. Yes, so right here in the 30 minutes we see that this was where the previous order block in the 1 hour was, right? So when you come down, you find that there are now two, so you choose the one that is the last candlestick before the upward move, you understand? Yes, so for this case, this is the one, and we're just going to put this, pull it this side. Yes, so one thing that you guys should notice is this long wick. Are you seeing this long wick? When you're putting your entry, make sure you put your stop loss below this long wick so that you don't get stopped out. Like if the market comes here, it might come and clear this liquidity and you're just taken out. So put your stop loss below the week, right? Yes, so we are good there. Hope we are all good. Then there's something we see here. We see a break of structure. We see it to the upside. We shall just name this a break of structure. Then let me make it clear. Then we have the order block. Actually, this is the most recent break of structure, so it is the one we are going to focus on now. Let's first leave the ones which are down, because the market is very, very far from them. Yes, so as you can see, we have a break of structure to the upside. Then we have this candlestick that is before the upward move. As we said, this candlestick is called an order block. An order block is the last candlestick before an upward move. Okay, so now we scale down to the lower time frame, which is 15 minutes. Scale to the 15 minutes time frame, and then we refine our setup. Yes, so this is gonna be the order block because it is the last candlestick before the upward move. Are you guys now understanding? Like, the last candlestick before the upward move is what we call the order block. So you just point it out and wait for price to come back there, and you're good to go. You can just enter for a good position. Yes, so this is our break of structure. We just gonna adjust it. Break of structure. Then as you can see now, the price is reacting to this point. Like right here, before it came and tapped in and went back up, left for us this long wick. So it signals that sellers are losing control in the market and buyers are now gaining control. So this is why this long wick was formed, and now it is also a signal that this demand zone is a very, very strong one, and it is likely to push the price back up once it touches it again, of which it has already touched, and now that's where our entry will be. Then our stop loss, I told you when we're putting our stop loss, we put it below the order block. Okay, not just at the same point like this, not just like this, because the market will stop you out. Put it a little bit lower, and then you can go for the point of reversal, which is this one, where the market reversed from, and that will be your point of target. So if you don't like that one, you can just go for a 1:2 risk to reward ratio, and you just wait for the market to play out, and everything will be there. So that is how we do a top-down analysis on demand and supply. So if you find this video helpful, you can just go ahead and subscribe, hit the like button, also drop a comment so that I can know, like, if you guys are enjoying. Just drop a comment, and thank you so much. See you in my next video.